America's job market just delivered a powerful surprise, creating 130,000 jobs in January and beating all expectations. Good evening, everyone. We have some significant news that's hitting the wires right now, painting a surprisingly robust picture of the American economy. The U.S. added a massive 130,000 jobs in January, completely blowing past what economists were expecting. This isn't just a number. It's a powerful signal that the job market is far more resilient than many had feared, and that's good news for millions of working families across the country. Now, let's put this incredible January performance into perspective. Economists were largely forecasting around 70,000 new jobs for the month, so hitting 130,000 is a significant beat. What makes this even more impactful is the backdrop. The Labor Department just completed its annual benchmark revisions, revealing that 2025's job growth was actually much weaker than initially reported. We only added 181,000 jobs in all of 2025, a sharp downward revision from the previous estimate of 584,000. This means January's strong showing isn't just good, it's a welcome rebound after a year that was unexpectedly soft. The unemployment rate also ticked down to 4.3%, slightly better than the 4.4% forecast and December's rate. So where is this unexpected strength coming from? A closer look at the report reveals specific sectors are leading the charge. Healthcare continues to be a major engine, adding 82,000 jobs, driven by the aging population. Social assistance also saw robust gains of 42,000 positions. And in a positive sign for future development, construction payrolls grew by 33,000. This diverse growth across essential sectors indicates underlying demand, even as other areas like the federal government and financial activities saw some job losses in January. This strong jobs report has immediate implications, especially for the Federal Reserve. A robust labor market coupled with steady annual wage growth of 3.7% often signals that the economy can handle higher interest rates without stalling. This could reduce the urgency for the Fed to cut rates. Before this report, markets were pricing in a higher probability of rate cuts as early as March. Now, that expectation is quickly fading. Policymakers concerned about persistent inflation pressures might see this as justification to maintain a more cautious stance, potentially extending the pause on rate cuts that began last month. This directly affects borrowing costs for everything from mortgages to business loans, so the Fed's next moves will be closely watched. Looking ahead, economists are now pondering the sustainability of this strength. Will January's surge be a one-off or the start of a firmer trend for 2026? Experts will be keenly watching upcoming data. The next jobs report, usually the first Friday of the month, will be crucial. Additionally, factors like evolving immigration policies and the increasing adoption of AI in certain sectors could shape job growth in the coming months. While some forecasts still point to a slowdown in overall growth for 2026, the January numbers provide a strong counterpoint, suggesting the U.S. labor market has more life in it than many believed. So, what's the ultimate takeaway for everyday Americans? The January jobs report is a clear indication that the U.S. economy is demonstrating remarkable resilience. More jobs created and a lower unemployment rate signal a healthier environment for workers and their families. This renewed strength offers more opportunities and a greater sense of stability in an unpredictable world, ultimately giving people more confidence in their job prospects and their financial futures. It's a positive start to the year for the American workforce.
This is GeeseFinance.